Volume is bullshit, and here is why. What's going on, everybody, and welcome back to yet another video. And in today's video, I'm going to be explaining why basic volume analysis is very misleading, and I'm going to show you how to start correctly interpreting volume, as well as piecing it together with the price action to ensure that you have the highest probability of a winning trade. But real quick, as always, if you guys do find value in this video, make sure to smash that like button as well as clicking that subscribe and that bell icon. It would mean the absolute world to me. But without further ado, let's hop into it. All right, so when it comes to basic volume analysis, the way that I see a lot of people start interpreting volume is simply just based off of the candlestick color as well as the volume color. So people start interpreting, oh, well, this is a red candle and we have a lot of red volume. That means there's a lot of selling. However, that is not correct at all. Or over here, there's a red candle with a small lower wick and there's elevated red volume. That means that there's more selling. And again, this is not the correct way that you want to start looking at volume, simply just based off the color of the candlestick as well as the color of the volume and how high or low it is. Or over here, a lot of people would look at this and say, oh, well, this is a green candle. There's a lot of green volume. That means there's a lot of buyers. Again, that's not entirely correct. And that's why you can't just depend on basic volume to give you the full story of truly what is happening in the market. And I actually want to show you guys a really good example of a trade that I took on Thursday. So here is Thursday right here. So this is Thursday right here. And I actually ended up going long on SPY, buying SPY calls on this candle right here. Now, a lot of people would look at this 2-minute chart and be like, well, we had this huge red candle here to the downside, and we had this huge volume spike with red volume. And they would assume that more than likely it's a lot of selling pressure. However, that was not the case. And actually a majority of this volume came in down here where the buyers were absorbing the sellers. So again, that's why you can't simply just look at a chart, look at the candle and the volume and expect to know what's going to happen next, because you have to start looking at the price action itself. Where is price trading? Is it trading at a key level? And then also looking at the volume. So because I have this pulled up, I want to show you guys how I pretty much caught the bottom on Thursday using a key level, price action, as well as the volume to get a full understanding about what's going to happen next and being able to capture this entire move to the upside for a 150% return. Okay, so I want to show you guys my pre-market plan from Thursday. No, I'm not telling you guys to join the Discord. I'm literally just showing you that this was my exact plan going into the day, because it's showing you why that level was important and why I got long on SPY. So if we look at my pre-market plan that I put out 45 minutes before the market opened, you can see that I said SPY bounced 1 hour 21 EMA, and then I had some fibs. Here was the screenshot before the market opened, showing that that 1 hour 21 EMA was right here. So looking at ES or SPY, we'll actually just pull up SPY because they look the exact same on Thursday. But if we look at Thursday, which is right here, this is my 1 hour 21 EMA. So you can see right here, moving average exponential 21 EMA. This is a very important level when it comes to day trading, especially if price pushes away and does not test the level for a little bit. So on Wednesday, we had a very large move away, never tested that 1 hour 21 EMA during market hours. And that's why that 1 hour 21 EMA was on watch. So if we just go ahead and mark where that 1 hour 21 EMA was right here, and then we simply break it down to a 2-minute time frame, which is typically what I like to use to snipe my entries. And we head on over to Thursday, which is right here. You can see that when price came down into my level of interest, that 1 hour 21 EMA, yes, it was a very large red candle. However, we had this nice lower wick bouncing right off of my key level. And when you're actually watching this in real time, you could have seen that actually a lot of this volume started to come in as we dipped down into the level and started pushing back up. So again, simply just looking at this, that's a red candle and red volume. That's not enough for us to fully understand what's going to happen next. Now, once we piece together that key area, and then we start to notice this lower wick right here, a reclaim of the level and the elevated volume, now we can start piecing those three things together and say, hey, price is actually more than likely going to bounce here. Let's try some longs or buy calls, whatever you want. with a stop right below this low right here. And again, we were able to ride this thing all the way to the upside, and I sold, I believe it was this candle or this candle right here, again for around 150% return. And the reason why I ended up selling is because we got this nice upper wick right here, and as I was watching the price action, a lot of volume started to come in as we were rejecting off of this area right here. So again, we have to piece those three things together: key level, price action, and volume, and that's what sets up for a high probability trade. But also at the same time, when price is coming down to a key level or up to a key level, if we start rejecting or bouncing off of it and we don't have that elevated volume, that actually suggests to us that there's not a lot of buying or selling interest, and we more than likely should not take that trade. So as previously mentioned, every trade I take, first price comes to that key level. I then observe the price action to see if it's confirming if price is going to reject or bounce off the area. And then I confirm it with elevated volume. And if I get those three things, that's when I end up taking a trade. If you guys want to learn more about my trading strategies, I did write 2 books. They're both on Amazon. The New Age of Technical Analysis, which is 450 pages, and The New Age of Day Trading, which I think is like 315 pages. If you guys want to check those out, that link is going to be down in the description. And then on Wednesday as well, I actually was able to catch the bottom on QQQ, and I want to show you guys how I did that as well. So simply just taking a Fibonacci retracement from pivot low to pivot high. As the market opened, price traded down into the 61.8% retracement. You can see this on the 5-minute candle or even the 2-minute. I'll show you guys the 2-minute after we talk about the 5-minute. But say you were using the 5-minute time frame. Well, price starts flushing to the downside and we get this red candlestick right here with higher red volume. However, look at the actual price action and where price is bouncing off of. We bounced off the 61.8% retracement, which is key in an uptrend. We have a very nice lower wick off of that level, and we actually have higher volume. So what this is telling us instead is that a majority of the volume started to come in down here, and the buyers were more aggressive than the sellers, pushing price right back up into this area. So if you went long at the end of the 5-minute candle, you got long right around this area right here, and your stop loss was right down below this low. But if we break it down to a smaller time frame, such as the 2-minute, and go back to Wednesday, we can actually see on the 2-minute that this gave an even better entry. Again, here's our same pivot low to pivot high. Price trades down into the 61.8. You can see we got no confirmation at the 50% retracement. Nothing special about the volume. Nothing special about the lower wick. However, when we trade into the 61.8, yes, we have a red candle. Yes, we have red volume. However, look at that red volume and look at that lower wick in the area that we're bouncing off of. 61.8% retracement, long lower wick, and elevated volume, suggesting that a majority of the volume started to come in down towards these lows right here, and the buyers were pushing price back up. So as we held that area, we ended up getting long, stop loss right below there, and I was able to capture this. I actually sold this one way too early, but sold it for about a 50% return, and I think they ran all the way to like 300 or 400% that day, which was crazy. So definitely paper handed that one. But again, I want you guys to see why I'm taking these trades. It's the same thing over and over and over again. We come to a key level, we get confirming price action, we get confirming volume, and then we start pushing. I'm never relying on volume just by itself to tell me what is going to happen next in the market. Anyways, that's going to wrap up this video. So hopefully you guys did find a lot of value. As always, if you did, make sure to smash that like button as well as clicking that subscribe and that bell icon. It would mean the absolute world to me. And if you guys aren't already, I highly suggest tapping into the free live streams that I do every single morning at 8 a.m. Eastern time. And I also do live trading at 9:20 a.m. Eastern time to around like 11:30. Anyways, everybody have an amazing rest of your day, and I'll see you guys in the next video.